Hello, it's Mark Albert. Thanks for being with me. Today we're going to look at the mortgage market. Get a bit of an update. I read this long report, and of it I just pulled a little bit of data for our consideration today. So Mortgage Professional Canada, they released its State of the Mortgage Market report. And you know, when the United States President, when he does his State of the Union address, it's a big deal down there. And for Mortgage Professionals Canada, when they release their annual report, which is this at the end of every year, it's a big deal for them. So there's a lot of good data, and I just want to highlight some key things that I think you may like to see there. So we look at the stats on home ownership. There's about 10 million homeowners or homes that are owned in Canada. In fact, the number is 9.8 million homeowners. Of that number, some of them have paid off their mortgage. And ideally, you want to move towards complete debt elimination, being debt-free. However, there's still 6 million Canadians or Canadian homes that have a mortgage still attached to their home. Of that number, 1.6 million of these have what they call a HELOC, which is a home equity line of credit, which is basically a line of credit that's attached to the equity in your home. And it's just interesting to know that. So the strategy should be for these people who own a home is to pay down that debt as soon as they can to become debt-free. So of the people who have mortgages, of those 6 million, 68% of them, they have what they call a fixed rate mortgage. So that could be a 1-year fix, 2-year, 3-year, 4-year, 5-year fix, could be 10-year fix. They're just a fixed, the rate is fixed for a period of time. And 27% have a variable or adjustable rate mortgage. So if we look at the fixed rate mortgage, in the last couple years or so, we've been in an interest rate increase market. So the rates have been increasing. The Bank of Canada, they keep doing interest rate announcement hikes. And so what happens is a lot of people, I know when I'm working with people, either one or two of a couple, or both, or whoever's on title, they just feel, I want to go to fixed rate mortgage, give me peace of mind. And I think that's why this number is a bit higher, because prior to this last 2 years, we've gone through 10 years where you would have been better off being in a variable rate mortgage. Now of this number, 5%, they've got this hybrid mortgage, which part of it is fixed rate and part of it is a variable rate mortgage component. So it's a hybrid. Not very common out there, but it's about 5% of the mortgages. So we look at amortization, we see that 89% are in a mortgage that is amortized 25 years or less. And 11% of the people, they're in a mortgage that's amortized longer than that. So you could get a 30-year mortgage amortization. I have a few lenders where I could get a 35-year amortization. Now, obviously, people aren't getting that to pay down the mortgage quicker, but it may help them qualify in light of the current stress test just to get in the market. When someone's in the market, they're in for several years, and then they're in a different situation, and maybe they can go down to a 25-year amortization mortgage. And then finally, the average amortization period is about 22 years. So just information for us to know, and sometimes it's good to know and understand these things and ask questions. Well, why is that the case? Listen, hope that you found this helpful. Thanks so much for being with me. Have a wonderful day, and we'll talk to you another time soon.